Well, everyone, we finally made it to 2021, so welcome to the new year and my first video of this new year. I hope that all of you were able to enjoy the break and hopefully spend time with friends and family if possible while also staying safe out there. Now, I know how hard it can be to jump right back into work after a holiday break, and I do not consider making these videos work, but they are time consuming and I do have other things going on, so I wanted to kind of ease my way into this new year and just start off with a pretty light video. So what I'm going to do in today's video is give you my 5 favorite stocks from 2020 from the Watch This Wednesday series, as well as talk to you about any updates I'm making to my channel, because I do plan on making a few changes with the content I'm putting out there, hopefully to create a little bit more value for all of you. And in case you're wondering, I'm going to completely ignore the fact that Fubo tanked right after I talked about it, so let's play the intro and move on with the stocks that did do well for us. Hey everyone, thanks for joining me today. My name's Matt. Before we get started here, as always, I just need to say, this is not advice. Please don't take this as advice. If you do need advice, speak to a financial advisor. Just for your entertainment purposes only, so do not make any investment decisions based solely on what I say here. And let's just go ahead and start it off here with a reason why I'm sure all of you are here, and that is to talk about my favorite stocks from 2020. And actually, we're going to have about 6 this time because we do have an honorable mention for this one, which I'll start off with. And that company is Chewy. Reason why Chewy is on this list is because it actually performed better than I thought it would. I kind of thought this was a little bit of a risk to add to the portfolio, or maybe the stock would just be relatively stagnant, but it performed very well for us during the time that we've owned this stock. Now, what I think Chewy has done very well is positioning themselves against Amazon. Obviously, trying to take a portion of Amazon's business away is not going to be an easy task, but Chewy has done it very well. And I think it's because they are focused on a niche market that truly needs as much focus as you can get, because pets are everything to their owners, and having the proper care and treatment for your pets goes such a long way. And to really back that statement up, Chewy still has over 60% of their customers are returning customers or are set up on an auto ship program. So again, as an investor, having that recurring source of revenue is a great thing for me to see, but also the care that they put in towards other people's pets goes a long way, from sending condolences cards when a pet passes away to easily accepting returns if a pet passes away. So it's a company that I really like, and one that I'm very excited to see how they perform in the future. All right, so the first stock that we'll talk about, my favorite stocks from 2020, is going to be Adobe. Now this is number 5 on the list, so number 5, but it was still a really good performer for us, and it's a company that I find very exciting. I'm sure most people out there don't, but I really like the product and service that Adobe gives to the market. And what I really like about this company as well is they have enough different products and offerings to really reach a broader market, but the products that they have are still very high quality products. So you never really hear of anybody saying that, Adobe Photoshop is garbage of a product, don't use it, because it is truly used by both professionals and entry-level people into either video or photo editing, as well as their many other softwares that they use. Now, as I mentioned though in my Watch This Wednesday video for Adobe, as a consumer, I am not a fan of this subscription service because it is very expensive to be able to use their products or services. And that's actually why I use After Effects for all my video editing, because just $45 a month, I believe it is, adds up very quickly for their services. That said, as the investor, I love the fact that it's a subscription-based plan, because that does give them a reoccurring source of revenue and ultimately brings them more money than it would should they just sell those products individually. Part of the reason why this one made the list though is because we bought 10 shares of Adobe at $371.62. And right now, or last I saw, it was trading around $500.12, which gives us a gain of around $1,288. So not a significant gain, but certainly nothing we can be unhappy with, because it's a positive gain and fairly significant compared to some of the other positions that I picked over the course of this year. The 4th stock on the list, though, is Shopify. Now, I've been a long-time fan of Shopify, so it really probably doesn't come as a surprise that this one made it onto the list. One of the many reasons why I love this company, though, is because I think that their CEO, Toby Lutke, I'm sorry if I'm saying that incorrectly, I think he is a great leader for this company and has really driven Shopify in the right direction. Things like their partnerships with Walmart, allowing for the Shopify businesses that have their online commerce stores to link their products to Walmart, gives their customers so much more exposure that they didn't have previously, which would really help drive sales. Shopify themselves also receive money from multiple sources on a monthly basis. So they have the people that have their add-on services like MailChimp. They'll receive a portion of that revenue. They receive a portion of the money from people that have Shopify stores. And at the start of the whole lockdown period, they were actually loaning out money to their businesses as well to make sure that they stayed in business. So sooner or later, that's going to be another source of revenue for them from those interest payments that they'll receive back from those loans. We can't also not mention, though, the fact that Shopify has about 1/3 of the e-commerce market space. So they are a very large player in this space, and meaning that a lot of business that you do online will flow through Shopify. And lastly, I'm always a big fan of businesses that empower the individuals that use their platform to create their own business and potentially create multiple sources of income for themselves. I'm a big believer in having multiple sources of income. It's something that I believe a lot of us should strive for. And Shopify allows for people to do that very easily. And many people have had great success with using their Shopify stores. We only purchased, though, around 5 shares of Shopify, and that was around $761.55 because I didn't want to put so much money into that. And fortunately, though, it's currently trading around $1,131, which gives us roughly a gain of about $1,851. So again, nothing significant. We didn't blow up with this stock, but it still was a great source of gains for us in this portfolio. Now, number 3, I was actually surprised that this one made it on the list, but it's Disney. And the reason why I say that is because really at the beginning of this year, I never thought that Disney would go out of business, but I didn't necessarily expect the stock to rally the way it did. And I would say, if nothing else, Disney has shown us, potentially more than any other company during 2020, that they are a very resilient company because they performed so well having to overcome so many hurdles throughout this year. As we all know, they had to shut down their theme parks, which obviously created a major pain point for them, but that wasn't the only hurdle that they had to overcome. They couldn't create new content for the brand new platform that they just rolled out because a lot of the studios were closed at the beginning of this year. Sports weren't on TV, so ESPN was really a dud for the time being. Oh, and we can't forget the fact that they also have a cruise boat that had to be docked for the majority of this year, given that cruises weren't operating. But somehow, throughout all of that, Disney still managed to end up on top, and we were able to reap the benefits from that. We bought about 35 shares of Disney, and at the time it was trading around $116 a share. Currently, it's trading around $181 a share, which gives us a gain just shy of $2,250. So we're starting to see a little bit more significant gains. But again, this one really blew my mind because I know a lot of people held out on Disney thinking it would drop to about $75 a share to buy it. And I don't think it did. And at this point, I don't see it shedding $105 in its share price. So I'm very excited about Disney. And again, this one pleasantly took me by surprise, which is a good problem to have. The next company that we have on the list here, though, or the second one, is ChargePoint. Now, I believe, and I could be wrong here, but ChargePoint might actually be the only SPAC company that I added to the Watchlist Wednesday portfolio this year. The reason why I love ChargePoint and why I decided to invest in this one over some other electric vehicle companies is because they provide a solution to a problem that every electric vehicle is going to have. They're charging stations. Obviously, I think charging stations, not necessarily right now, but in the future, are going to be like the next gas station. And ChargePoint is well positioned to take on that task. And as I said during my ChargePoint analysis, it's not like we're going to have to try to pick which one of these many EV companies coming to market is going to be the best performer, or if we stick with Tesla, or is it going to be an old generation car company like Honda or Chevy. Rather than dealing with all of that, we just focused on the solution, which is charging. And I think really that speaks a lot to my investing strategy of I'm not really one to try and pick the winners out of a group, but rather look at the solution to maybe a problem that they all have. And as I've said now for like the 5th time, that's really where ChargePoint, or as we used to know, Switchback Energy, came into play for us. Now, we were able to buy 150 shares of ChargePoint, and it only cost us around $16.75 a share. Reason why I say only, because Now that stock is trading at around $36.75 a share, giving us a gain just shy of $3,000. I believe that's around $2,991, give or take. So it is a significant gain for us, especially considering I only did that stock a couple weeks ago. It was definitely like post-summer I did that stock. So it's a new one to the portfolio, and it's still one of the best performers that we have. And my favorite stock from the entire Watchlist Wednesday portfolio, funny enough, is the very first stock that I did on this video series, and that's Peloton. Now, it's kind of funny the way that Peloton came onto my radar, and I'll give a quick story about it. So when the whole lockdown first started and everybody's doing Zoom calls with all their friends, I was doing a Zoom call with a lot of my friends from college, and I have one friend that works for a gym. He's like a manager. I don't want to say which one just in case. But he was telling me, he's like, I know a lot about their stock. Once everything comes back, the stock is going to boom. And that kind of clicked to me that people aren't going to the gym anymore, and they're probably still looking for alternative ways to exercise. So of course I started doing my research, and you come up with like Bowflex, Nautilus Company, and then Peloton. And I was like, this sounds very interesting because I see these Peloton trucks driving everywhere. And I asked my friend about that. I was like, do you think even once they open back up, our gym's going to surge back to the way they were? And the fact that he was hesitant on that answer made me realize this stock actually has some potential to it. So upon doing all my research for that stock, I decided to add it to the portfolio, and it happened to be the best stock that we've had inside of this portfolio throughout this entire series. Now, we have had it the longest, but even putting that to the side, it really squashes every other stock that we've purchased. And again, the reason why I like this one is because I think the timing of this stock being public was absolutely perfect. And there's always a silver lining to everything. So even in bad times, we all know some companies profited, like Zoom. And Peloton was also one of those companies because all of a sudden people wanted to hit the gym, and Peloton was creating a brand, a lifestyle, borderline a verb at this point, and it had just such a large following, especially with people like Ellen or I forget who else, but a lot of celebrities endorsing the product without being paid for those endorsements. Create a lot of brand recognition. On top of that, they do have a reoccurring source of revenue, and they're partnered with Affirm, which is the stock I'm still very excited about for this year. Hopefully it actually comes out. But at this point, you might be wondering, well, how good did Peloton actually do for us? So we locked in 75 shares of Peloton at $41.16 a share. Currently, it is trading at $151.72 a share, giving us a gain of around $8,291. Again, that is a substantial gain for us in this portfolio. Now, was it the best performing stock of 2020 overall? Absolutely not. I think Tesla, NIO, and all those companies definitely beat that. But for our portfolio and for my investing style, this stock was just such a perfect fit that I was so excited to do it. And again, it's the one that kicked off this whole series, and I think really created the relationship that we have between myself and all of you who watch my videos. So it's a stock I'm grateful for. I'm very glad I had that conversation with my friend, because who knows if this series would have actually come to fruition. Because again, I more or less saw the way that he was looking at this stock versus the way I was looking at it. And it made me realize that maybe I can teach people how to analyze different stocks. So that was just my thought process. So those were my 5 favorite stocks from 2020. Obviously, I think we did closer to about 40 stocks, so we're missing about 35 from that list. So let me know if there's any stocks that maybe you liked that I reviewed this year, ones that you feel like I missed, and do not mention NIO because I already know that I missed that opportunity. But would love to hear your feedback too. Or if there's any videos that you feel that I did that you really learned something from. That also goes a long way for me because, again, I really care, first off, that you enjoy my videos, but also that I'm helping make you a better investor, which is going to take us kind of to the next part of this video, which I promise will be fairly quick. And that's going to be the changes I'm making to this channel. So I'm done with my real estate class, but I am still in the process of kind of starting a real estate business with 2 of my friends. So that is going to be a very time-consuming process, and admittedly more time-consuming than I thought, but in the best way possible because I'm so excited for this opportunity, and it really can be a life-changing opportunity for me. So all of that aside, I'm still going to be able to make videos. We'll still stick with the Watchlist Wednesday series, and I'm going to do my best to throw in maybe 1 or 2 other videos a week. So you should still expect to see around 2 or 3 videos a week from me. But the changes I'm going to make is I want to incorporate more of an educational series in this. And this is a suggestion from Billy, as well as my girlfriend has been telling me I should do videos like this for a while now. So I really want to make videos that actually explain some of the terms and concepts that I talk about during Watchlist Wednesday, so that way you can actually follow along with me and not have to try to go back to like a certain video where maybe I explained EBITDA and try to find all of that. So, some common topics would be like, what is the real difference between price to sales, price to book, and price to earnings ratios? How are those calculated and how are those manipulated by management to make them not really the best ratios to be looking at? Or the difference between a quick and current ratio, explaining EBITDA, and if we make it that far, I might even do a series on options. So that's kind of the direction I want to go in, because again, my goal here is, yes, obviously I want to provide you entertainment, but I want you to learn as well. And I'm not knocking any other finance channels out there, and there's obviously different strokes for different folks, especially in something like analyzing stocks. But I really try to differentiate myself from those that just pull up an earnings report, have a few key things highlighted, don't really explain it, and then pull up a chart and are like, we're looking at these signals and call it a day. I like to actually explain my thought process, why I like this company, the terms behind it, comparing it to other companies. And again, I feel that really helps you become a better investor, at least if your investing style matches how I like to invest in companies, which it seems like the majority of you do like the way that I invest. So would love to know your thoughts on that. And to start it off with, please let me know if there's any topics that you would really like for me to start off with, whether that be the PE ratios, the dividend yields, which I already did a video on, but I'll happily do it again, options, really anything like that that I can do to help you, again, just understand this industry better, to make you a more knowledgeable and strategic investor. So with all that said, I'm going to wrap up here for the first video of 2021. Very excited to see what this year brings us. And I guess I should also mention that I'm debating, and would love to know your feedback if anybody's still watching this, I'm thinking of maybe keeping my real estate stuff on a separate channel, or starting a separate channel and keeping this one just more to like stocks and ETFs, because that's really what I feel like I've been doing mostly on this channel. But let me know if you'd like for me to throw in real estate from time to time, or show you some videos with how that business is going, or just leave this entirely to stocks and start a separate channel. So would love to hear your feedback on that as well. But again, it's a brand new year, brand new month, brand new day. I don't know what time of day you're watching this, so hopefully it's still a brand new day, but let's just make sure that we make this the best year possible for us. One thing I do, little tip here, is I think year-long goals are too much, because I get bored of that goal by the end of the year. If you are one of those that likes to set a goal for yourself, try a 90-day goal and see how many 90-day goals you should be able to accomplish during the year, which should be 4. You might feel a little bit more accomplished, and I feel like when you give yourself a shorter time frame, you can actually accomplish way more than you ever anticipated. This is a strategy I learned from Bigger Pockets. So try that out if you want to try something new this year and help achieve more goals than you thought was possible. That said, here, I'm going to wrap up here, so thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world, and you're right here with me. I really appreciate that. I'm going to let you go ahead, enjoy the rest of your day, and I'll see you next time. Definitely just realized I forgot to say like, comment, subscribe, all that good stuff. Also, some of you have been following me on Instagram, but you've been following my real estate page. If you have questions for me and wanted to reach out to me directly, I'll leave my actual, whatever it is that a handle? I don't know. I'm not trendy enough to know what it's called. I'll leave how you can actually find me on Instagram. Send me a message that way. I'll get back to it much sooner than if you send it through my real estate page. Anyway, now I'm done here. Thanks again. See you next time. 2021. Let's make it something cool.